India, without a doubt here, if you just look at the figures, is what you call your bright spot economy, or as you see referred to in the news quite often as the fastest growing major economy. We're expected to close this year at about 7.3% growth, which is phenomenal, considering a lot of the trade policy volatility we saw last year. The pace at which India is rapidly signing free trade deals is a key driver when it comes to its go-to market resilience, particularly because I think the figures show that over the past couple of years, India has signed somewhere in the realm of about 8 free trade deals with about 38 advanced economies, which is massive.
Now, when we speak of Indian healthcare, we have to look at it from both the lenses. We have a very strong supply story, which is anchored in decades of experience and legacy, and also an increasingly maturing demand side of the story. Now, the CDMO industry will continue to grow for two main reasons. One, our domestic demand is increasing by 10 to 12% every year. So we have to cater to that domestic demand while reducing our import dependency on China. Secondly, given all the global factors, if we talk about Biosecure Act, overall trade tariffs, overall pricing pressure on pharmaceutical companies, these companies have to leverage outsourcing from more affordable destinations like India.
The consumer pattern has largely shifted towards health and wellness. So when we are speaking about food security, it's not only about food, it's also about nutritional security. And that's where I think the globe and as well as the India market is also moving towards. Now, when we look at Indian food and I would say food and wellness or food and beverage industry, by FY30, it's expected to reach around $1.6 trillion. That's huge, and that's around, I would say, almost around 8 to 10% of the global food and beverage industry.
I think, but one of the major remarkable things which has happened, or a tectonic shift which has happened in the Indian capital markets, is the inflow of the domestic capital markets or the inflow of the domestic funds coming into the market. So we have seen a sustainable increase in the DII inflow, and so much so, if you were to really look at the ownership of companies, where they were largely like outside of the promoters or others, if you look at institutional breakup, the foreign institutional investors who held almost 21% and 14% was DII. But now the trend is reversed, where the DII holding has gone up to 18% vis-a-vis that of FIs have come down to 17%. It's a 20 years of fundraise being happening in 5 years. That's a very, very big shift which has happened, and I think it's happened on the back of the sustained flows which have happened. The average IPO size has gone up. My view that this time is golden for India. I think as long as the businesses are, the people have entrepreneurship, as long as the business model is good.
In the last 7 working days, we have had 3 big things happening. Everyone reiterating it, I'm just reiterating it again. One, the historic 20-year-old Indo-EU trade deal, which has opened a lot of new windows for Indian companies, right? We are opening and expanding our export presence from the historic destinations. 2, we have had a important budget focusing again on 2 things: Viksit Bharat, making India as a reliant, in terms of manufacturing, based on a growing consumption demand, right? That's also important. 3, increasing number of consumers not coming from the traditional tier 1s, metros, tier 2s. They are expanding beyond that.